But let's welcome in our guest, Shailendra Kumar, Director at Narnolia Financial Advisors, to understand as to what is his view with regards to market. Shailendra, overall, if you go to see, the week has been pretty much volatile on the back of the geopolitical tensions across the border. Today, the markets are also clearly cheering the welcome of Abhinandan. What do you make of this? Do you think that this is a rally which is expected to continue ahead of elections?
See, one noticeable thing for the market this week had been, despite so much of a news around the geopolitical things and some hint of a kind of a small scale war, the market has behaved very in a matured fashion. So the market was in a range for last 3-4 months between 10,500 or 600 to upper side 11,000. Even the kind of news that came during the week, market did not had a selling which could break the lower range of the current market range overall. So that tells you market is in a very matured phase right now. Also, there surely is an absence of selling because until unless there are stocks are in the weak hand, and the weak hand will only react on all kind of a negative development on geopolitical front and all. So it appears very right now that whatever float or whatever investment things that are there in the market right now are in a very strong hand, and there are no desperate seller anywhere. And surely also the leverage positions are very negligent. Otherwise, some kind of a sharp selling you might have seen on Tuesday and Wednesday. So absence of those surely suggests you market is in a very strong hand right now.
Right. So the resilience that we are seeing with regards to markets is something that we are watching out for. In fact, the FIs have continued to be buyers throughout the week, and that is a positive sign. Buy on dips is the kind of strategy that FIs are looking at. In fact, 20,000 odd crores is the kind of buying number that we've seen from FIs as well during this week so far. However, there has been a sell number that has come in from the DIIs, but what's going to be the strategy going ahead is something that we need to watch out for. Moving on, you have the auto pack that is in focus in today's day of trade. It's a pretty mixed bag that has been recorded so far in the month of February. The weakness continues with regards to where Maruti is concerned, where the exports are down nearly 20%. Ashok Leyland also, if you go to see, the numbers have been below what the street was estimating. One surprise has been Escorts, where the numbers are above what the street was estimating. Whereas if you go to see iSure, M&M as well as Bajaj Auto also are in focus. In fact, if you see in terms of Bajaj Auto, it's the domestic CV as well as the domestic two-wheeler space that has played spoil sport this time around. And in terms of where M&M is concerned, the total sales have gone up by around 10%. So it's a strong number coming in on the automobile side, whereas the tractor sales have been below what the street was estimating. Eicher Motors as well, VECV, the numbers are above estimates, but there is weakness on that front. Let me take a question with you, Shailendra, with regards to where auto sales is concerned. What is your view? Because February has been mixed. We are not really being able to find a clear direction coming on that front. Do you think still this is a good time to enter the auto counters?
Okay, so two parts. Like first is the kind of number we saw in for the February. Now February is a marriage season, and you hope that the consumption side auto names, the two-wheeler and the four-wheeler, will come out with a better numbers. But surely there is a disappointment, and auto being a little lead indicator for the consumption. The auto number that has come last month, even this month, surely tells you that the consumption is somewhere a little bit slowing for sure. Tractor number, if you see tractor numbers, rural economy is doing reasonably better. That is in the number, particularly in the northern side of the market, because Scott has come out with a good set of number for tractor sale, and they predominantly sell in the northern market. Mahindra and Mahindra tractor number are not that encouraging, maybe because of a regional bias, again more tractors in south and western market for Mahindra and Mahindra. So mixed trend in terms of rural consumption. Broad consumption, the urban consumption is surely, because the Bajaj Auto domestic two-wheeler number or Maruti's PV number surely suggests you that the consumption side is seeing some kind of a weakening, and these weakening will not go in a hurry. Having said that, when it comes to a stock, you have to see what are the companies. Say like I give Maruti for example, it's down by 35% from its peak. Surely right now the numbers are in a cyclical downside kind of a situation, but because it doesn't have any debt and already 35% below the peak will give you some kind of idea that the valuation for a couple of names is already factoring this weak market. So maybe a Bajaj Auto or maybe a Maruti, somebody with a longer horizon. In the near term, no rally can be seen because the consumption is surely slowing for these names. But somebody looking at a medium term view can find some kind of space in, say, Maruti or Bajaj Auto.
Right, medium term, Maruti or Bajaj Auto is looking good. In fact, the inventory level at the dealer front, as well as a slowdown in demand, is something which is impacting the numbers as well. In fact, we had a conversation with the management of Bajaj Auto as well. Let's hear out what he had to say.
We're quite sort of delighted that after the little bit of a slump post Diwali in late November and December, January and February have risen, and substantial and robust numbers are being reported. Change in our mix in favor of our premium segment. So that obviously has associate benefits. The margin story will be positive.
So that's the word coming in from the management of Bajaj Auto. In fact, another positive development with regards to where the auto as a segment goes is with regards to approval of FAME 2. We had a conversation with the with the management of M&M. Pavan Goenka is who we spoke to understand what are the kind of benefits we see from the approval of almost 10,000 crore rupees in terms of FAME 2 policy. Let's hear him out.
Clearly, this takes care of the uncertainty that the industry had. The 10,000 crore outlay is more than what was anticipated. There is a thrust on creation of infrastructure for charging, localization, value addition in India. In the next 3 years, we should get 15-20% reduction in cost, become self-sufficient 3 years from now.
So that's the word coming in from Pavan Goenka. In fact, to hear out the whole conversation with the managements of M&M as well as Bajaj Auto, it will be lined up in the latter part of the show as well. Please stay tuned. Right, moving on now, metal stocks are something which are in focus in today's session as well. In fact, all the counters on Nifty Metal Index are trading in the green, with stocks like SAIL, Nalco, Jindal Steel, Hindustan Copper witnessing gains of over 3 to 8%. In fact, SAIL is the top gainer on the index on the back of the price hike that they've taken to the tune of almost 1,000 rupees per ton. Also, you have JP Morgan, which has gone ahead and upgraded its rating SAIL to overweight. Let's understand more from Shailendra as to what his view is. Shailendra, in fact, SAIL has gone ahead and taken a price hike of 1,000 rupees per ton. And with that, this is the second hike in the last 2 months. In the month of February itself, if you go to see, steel prices have gone up by around 750 to 1,000 rupees per ton. Taking this into consideration, we have the other steel players which will be following suit. What would this mean for the steel companies?
Yeah, see, surely steel is seeing a little bit of cyclical upturn from here on. The recent series of price increases by the leading players surely mean realization will be improving for most of the steel names. And but one has to remember that even the NMDC has raised the price of iron ore in the market. So that means the margin expansion doesn't look a bigger story right now for steel companies. So the current series of price rise in the finished goods of a steel company will surely make realization going high. Margin will not see that kind of a compensation. So it will be a cyclical upturn. Most of the name has fallen by 40%, 60% from the peak in 2018. So kind of a 20% kind of a bounce back from these names will not be unusual to expect right now. Having said that, somebody looking for a 3-year horizon, I don't think still there is a case for it until unless infra capex improves dramatically in India, which before election we cannot have a clarity on that. So the idea is one can participate in the cyclical bounce right now. 15 to 20% upside surely could be on the card for most of the leading metal names. 15
to 20% upside that could be on the cards for most of the metal names. That's the word coming in terms of the metal counters. But moving on, ED has conducted raids at multiple locations, including Chanda Kocher's house and Videocon offices. Karishma Asadani joins us with the latest update. Karishma.
Just as we talk, currently we are at ground zero in Mumbai at one of the residences of Chanda Kocher, where the Enforcement Directorate is conducting raids. In fact, Enforcement Directorate is conducting raids at 4 such offices in Mumbai and Aurangabad where raids and searches are being conducted at Deepak Kocher's house, at Videocon's office and Videocon chairman, that is Venugopal Dut's house, and Deepak Kocher's office, that is No Power Renewables. But what's to be noted that it is also carrying out searches at Matrix Group for its transactions and connection with No Power Renewables. You know, Matrix Group chairman Nishant Kanodia is probed in connection with No Power Renewables. This all dates back, of course, after Enforcement Directorate had registered a case against the whole ICICI Videocon probe against Chanda, against Deepak Kocher and Venugopal Dut on 2nd of February, after CBI in its FIR had mentioned them as accused.
Right. Thanks, Karishma, for getting us all the details. In fact, we will come back to you as well with more details as they emerge. But right now, ICICI Bank, we are seeing some positive momentum, 0.8% higher. Let's see what comes out of the rates that are taking place, as Karishma was mentioning. Overall, if you go to see, if you can just quickly pull up a 1-month chart of ICICI Bank to understand how things have unfolded in terms of the stock price as well. There you go, 3.5% lower. It has been a volatile move. Shailendra, very quickly with regards to ICICI Bank, with the kind of concerns that we've seen, on the governance front now, 353 is where the stock is trading at. Now, do you think this is a good opportunity from the fundamental basis to enter the counter, taking that the business is pretty good?
Yeah. See, the operating business of ICICI Bank continues to improve continuously for last 3 quarters. The GNP has fallen, the PCR is very high. So, like everything which is fundamental as such, and valuation is very attractive. And look at, because of this Chanda Kocher Videocon saga, the prices are not performing. So in the last a month and 2, Axis Bank has done pretty decent on a stock market. ICICI Bank has languished almost because of this reason. Operationally, things are strong for ICICI Bank. The NIM is improving. The yield on advances are improving. The GNP has fallen. The PCR has gone close to 80. So everything on the fundamental is very strong. Valuation is attractive to somebody who can, digest a little bit of volatility because of this saga, should surely buy right now for a, say, even 1-year investments attractively priced right now.
Right. So that's with regards to ICICI Bank. Valuations are reasonable, attractively priced as well. That's the word coming in from Shailesh. But thank you for joining us, Shailesh, and sharing your views in terms of markets as well as the different sectors that we have spoken about as well. But moving on, market regulator SEBI, the board meet ends in Delhi. In fact, the finance minister Arun Jaitley also attended the meet. SEBI is likely to have approved the open offer exemption for companies under IBC. Meghna Mittal is standing by with the details. Meghna, what's the latest that you're picking up?
Yes, that's right. Today morning there was a SEBI board meet which the finance minister attended. Remember, it is customary for the finance minister to attend because it was the first board meet after the interim budget. The finance minister did address the SEBI board meet. The major things that were there on the agenda was definitely a discussion on the open offer exemption for companies which are bidding for the assets under IBC process. Now, what the sources have confirmed to us, that a decision has been taken to finally exempt the companies because they wanted to make the IBC process, entire process, more lucrative. There will be that will be a big motivating factor for the companies which are bidding under IBC process, because still now the exemption from the open offer could be given only by the courts. So this is what the sources have confirmed to us. The proper media release will also be issued in a short time for giving us details on this. What is also expected that might have been discussed in the agenda is tightening the disclosure norms for mutual funds. Remember, because there have been a crisis in the past with mutual funds investing in stocks like DHFL, ILNFS and Z Group companies, which has led to a crash in the stock market prices. But we really don't have an official confirmation on that. But as of now, what we do know is that open offer exemption has definitely been given for the companies under the IBC process. So it's a big motivating factor for them.
Big motivating factor coming on that front. Thanks, Meghna, for getting us all the details. We will come back to you as well on further developments to the story. But moving on, let's just quickly once again address the markets as we speak right now. In terms of Nifty 50 as well, let's see where that is trading at right now. It is at the day's lowest levels. Similar is the scenario with Bank Nifty as well, a marginal recovery that is coming in as we speak. But overall, in terms of different sectors, it's the PSU space which is pretty much in an upbeat with gains of 2.6%. 2.6%, followed by media, which is up almost 2% in trade, mainly led by AZ Entertainment. The metal index is up 1.5%. Moving from there on, the broader markets are also clearly outperforming, with the mid cap as well as the small cap index seeing gains upwards of 1% in trade today. Moving from there, the private banking space is also up 0.6 to 0.7%. So majority of the sectors, in fact all the sectors, are trading in the positive. And very interestingly, let's quickly pull up the VIX. 16.78, a downtick of around 8%. That is what is coming on the VIX as well, and clearly indicating that we are seeing the volatility that is slightly abating, and that's the reason why this kind of a move coming in with regards to markets as well. And Yes Bank continues to be the outperformer right now, followed by AZ Entertainment, Hero Moto, SBI. From the broader markets, Religare, SML, Isuzu, Force Motors. Let's pull up an intraday chart of Force Motors to understand the kind of move that we've seen on that one, because last when I checked, the stock was up around 7 to 8%. Right now, 16% is the kind of up move that we've seen on this counter. Again, one of the candidates with regards to the auto space go. CG Power is also seeing a strong up move. Moving from there on, Nalcos, IDFC First as well as NLC India are few of the top gainers as well. So a lot of stock specific, sector specific action that we are seeing, but I don't think so that it's anything that's not in a cheerful mode in today's session. Seems to be a good Friday close that we could probably see. But before that, we will slip into a short break, and then we will get you the management conversation with Bajaj Auto's Rakesh Sharma on their Feb Auto sales and M&M's Pawan Goenka on the big push for electric mobility as the cabinet clears FAME 2 policy. Please stay tuned to hear the conversations.